Welcome everyone to a balmy Sunday. We're going to go through and look at the week that was and the week that's ahead. Welcome all punters, dribblers, traders, investors, whatever your outlook is and what you're looking for. Remember, this is not financial advice. Please do your own reconciling, decision making, investigation. We're here just to share opinions and hopefully help you from our experience on the markets ahead. So without further ado, let's get ahead here. So welcome. It's been a busy week. So we're going to go through, if I can find it here. This is actually our second attempt, yes, because we changed screens evidently, and apparently the previous one didn't show up with all the charts we were talking about. So here's a rerun. We're going to start off with the S&P 500 as far as charts go, for obvious reasons, given that is the main thing that most people trade these days, but it gives you an overview on the market. So let's look at this. The key last week, or the focus, was really twofold. Was the Powell speech at the Jackson Hole shindig for all the central bankers of the world, and then we had NVidia earnings was probably your other big thing, and how the market reacted to bonds and currencies. Through the week, central bank-wise, really the only big change outside of that was the Turkish central bank raising rates a lot more than expected. So let's get into it. We spent a bit of time talking about NVIDIA. One, because of the action it took, they had much better than expected earnings. Remember, this stock was $100 at the end of last year, just over 100. It traded over $515. It did beat, and it is part of that AI mania, if you will. Now, the stock, by all accounts, is fairly priced, right? What's interesting is that the reaction after it. So, as we made a little point here, Analysts came out and upgraded it even more. Now, how does that happen? $700, $800, $900, right? Remember, they're analysts, not traders. They have a lot of analysts I meet have this incredible chip on their shoulder about traders. They get no love, or investors. They want it when they get it right, but not when they get it wrong, right? So just remember that. That's why we use NovaWave and dwell on our experience. At markets, markets are priced for a reason. Market makers price things for a reason, and markets get all one way, right? So that's why you avoid the dribbler when you can. You avoid the nonsense that gets out there and the hype. Why were they not buying at 100 or 200? Why are they doing it now, right? It was pretty well documented what was going to happen in much of this for quite a while. So anyway, that was your one big thing. Your other big thing with earnings was a lot of the retailers had absolute shockers. Like Dick's Sporting Goods was down 20%. A lot were like that, right? There's a whole slew of them. Foot Locker was another one. They're blaming it all on shoplifters. Nothing to do with anything else, all right? So keep that in mind. As far as markets went, the S&P and the Nasdaq were actually up first time in 3 weeks. Notice so, as we keep harping on about the yields and the dollar and bond markets way ahead of what stock markets are. So what we saw in this situation was the small cap, the Russell, was down for the week. That's what you'd expect with higher yields, bigger risk. The reason I just mentioned retailers, some of those are in that index. They're losing money. They got higher rates, and you could put the shoplifting down and acceptance of it. It's a shift in what the society is scared of. Remember that we're a split society these days, for the most part, partisan, and they're scared to say boo, right? So they just put up with everything. So now we've got a situation where shoplifting for the high insurance costs. We had Lululemon sack people that tried to stop shoplifters, for example. So it's endemic, and big corporations are moving out of where it's rife, in California in particular, Chicago. So we've had a whole change, and so the burden is coming back on companies and people that are willing to try to do the right things. It's going to be interesting how it shifts out. I have seen people say this is a conspiracy by Amazon and all this to get everyone shopping online, but I'm not one for that. I think it's more breakdown in culture, what's right or wrong, and what people are scared to do. And the other thing is, there's a lot of people with no money anymore, right? So if they realise they're not going to be anything's going to happen to them, they're going to steal, right? So the sad thing is when it comes, so I think it's kind of like when there's the devil you know, the devil you don't, or people, if it's not in their neighbourhood, they got some great theory on it all. Anyway, so that's going on. That adds into all your inflation costs and everything. The other big thing we're going to talk about is housing. So housing has become, or at least the affordability of housing has become a big issue, right? People just can't afford houses in many areas. So to buy a new house, that is, be that because of inflation or because of high interest rates. The thing is, what's confusing a lot of people calling the end of the world, a lot of people aren't buying new houses. We see that with mortgage applications at some areas all-time low. So again, this is where you live. It's all demographics, right? And if you've locked into a low interest rate over the last any number of years, 6-7 years, say 2%, 3%, you're not going to sell if you don't have to. You've got to factor in real estate changes, the inconvenience of it all. A lot of people now are working from home. So the environment's really different. And again, it's where the jobs are. We're seeing a lot, like I saw today, Houston is actually the highest immigration of anywhere in the country. Now, what I mean by that is immigrating from other states, looking for jobs, better standard of living and stuff like that. Well, I guess no one told them about the heat. It is hot this time of the year. But anyway, all jokes aside, so we've got to look at that a little bit different and how it affects it. Obviously, the real cost of living is a major influence. We've got low real wages, high real interest rates. Again, that comes back, and when we talk about bonds, how that affects it. So existing home sales were slightly weaker. Well, that's all the reasons we just said, right? But new home sales are slightly stronger. They're actually at a 7-month high. So that means people have saved up, or they have to buy a house. It's a natural thing with population growth, births and deaths, etc., right? So a lot of these are actually cash buying or heavily discounted, but not as much as they used to be by the builders, who are now changing the size of their houses and other things, right? Which is a good thing for energy consumption. Look at it that way. And energy costs. So these things go on. So what's interesting is the home builder ETF is up 32% year to date, after more than 500 basis point Fed rate hikes. It's a pretty incredible figure, really. You could argue that's a lot to do with the short covering that we got that spurred this market. Just remember, most dribblers are wrong. Most analysts are wrong. Have been wrong about this whole thing. They're bearish at the bottom, bullish at the top. You can go even just what's gone on this year, right? When we look at charts, when we've talked about this ad nauseum week after week. 30-year mortgage rates rose 8 basis this week to 730, the high back to December 2000. So that's some seriously high rates, right? So with other costs being higher, that becomes a real issue, and we got all those deterring factors. But people have saved up more, They're maybe looking at different houses, so they're going to balance all that out. So you got to factor all this in, whether it's going to be the end of the world or not. 10-year Treasury yields rose to 4.36% intraday Tuesday. That was the highest since 2007. So MBS is on the same day, 6.27. Again, the same. So 2007, if you recall, was right before the blow up in 2008, right? The whole fact where the greatest short and all that's made of. The difference is the run-in this time has so many people on those mortgages that are on lower rates. So it's a different affordability issue, right? So you got to factor that into this sector, which makes this not cut and dried. It is different other periods, but at the end of the day, if employment collapses, then all this, then it becomes a whole different caboodle, and it's going to be a brutal bubble burst. Obvious. So if you're conspiracy theorists, you'll think this is what the government, the New World Order, Powell and all that's trying to do. I actually don't think so. I think he's trying to muddle through it without all that collapsing. Central banks are very wary of being entwined with governments, and you can see what goes wrong when you just got to look at Turkey, right? With Erdogan getting them to cut rates, that caused the collapse of the lira even further. They went to 80% official, 80%. Inflation is probably a lot higher. Some say it's up as high as 150%. That country imports more than most and very reliant on it. Since then, he got in again. He's told them all to raise interest rates to try and protect the currency, bring it back down. So you fast forward to America. Well, Powell's got this option. Here's his two options for presidents, it seems. Biden, Trump are the two front runners, right? In a very divided partisan world, the Democrats believe Trump should be arrested, which they've already done actually. Biden, the Republicans all believe he should be arrested. So you got, at best, two criminal presidents, half the population looks at, right? So Powell's sitting back here going, oh shit. These are the two guys. We've got all this spending going nuts here. They're going to try to bribe the other side that isn't already in their camp, etc., etc. What's he do? We've spoken about that over time. So just think what's kind of going on there. So he's got to kind of muddle through that. Remember, he's not a politician, right? It's an important thing. And you've got both governments or both sides blaming him. So obviously Biden, it's all on the Fed. Before that, if you remember, Trump would go on about the Fed, right? So all that's in the mix. So let's fast forward. The title of this week is September, the September effect. So there is an effect out there that's documented, and now of course everything's known early, so at some point this will become contrarian. That September is the worst month, right? And you can see from the chart here, this is from Scotiabank. But going all the way back to 1928, what happened in 29? Well, that was the worst month for stocks, right, on average, for passive investing. So since 1945, it's a little bit better, but still down 0.7%, which is the worst for any month. And that's from the CFRA, that one. So we want to look, okay, what going to happen in September? We already know where we are. We've just got through most of the big earnings. So that's, for the most part, that's 3 months away now, right? So we then have to look at macro catalysts, right? Both in the States, with Powell has said it's data driven. We're going to, and both the BOE, but more so the ECB, have said it's going to be data driven, right? So let's look at the US. We got jobs report this week and PCE this week, which is the Fed's favourite look at inflation. So both these factors are out there, right? Let's just make sure this is all running. Seems to be. So we got all these things out there, right? So on that basis, we want to look past it. So we know what's this week. Okay, what we do then have is a slew of central banks coming up. right? So on the 5th we got the RBA, the BOC on the 6th, ECB on the 14th. The next FOMC is on the 20th, then the BOE at the 21st, Bank of Japan 22nd. So they're all coming out in September. We got a ton of catalysts as far as central banks. But data, so just this week alone, we're just going to focus on this week for data, is we got jobs, PC in the US, Canadian GDP, Eurozone inflation, Australian inflation, and in particular Chinese PMIs, because of all the focus that's on China right now, being the biggest banking sector in the world and the biggest property market sector, and they're basically imploding, right, or have imploded. Who knows what's really going on there. So that's just the fundamentals from this week. As far as central banks this week, all we have is Hungary, with a decision which really affects nothing, other than Hungary, of course. And then we got speeches from Fed, BOE, BOJ, and which one didn't I mention? BOE. Right, so that's all out this week. Now, one thing you should notice, we've mentioned that bonds run everything, currencies run everything, right? So, of notice on Saturday or Sunday, BOJ's governor said that they don't think inflation's high enough, and you can see dollar yens open up higher today, back over 146. Okay, so also remember these countries export. China exports, Japan exports. A weaker currency is better for their exports. And Australia's made this an art form. They'll knock down their currency effectively because they're the biggest exporter of a number of commodities. So one of their, and they try not to at least use false ways of employing by subsidies and stuff like this. So the currency is their price adjustment, right? So keep that in mind when you think of Japan and China, and those two compete from a lot of things. So the yen weakens, the yuan weakens, but they're saying they don't want it to weaken, but they kind of got to, right? So just keep all that in mind, So the other thing we always look at is Tesla, because that's a good mirror of the FOMO crowd and the passive crowd. Yes, Tesla's all changed up a bit with the whole partisan shift, or for some reason on Musk, all of a sudden he was the left dream because of EVs, which is going to save the world. And now they're realizing they're not. It's not just all equal as far as the damage it does versus, how you create electricity. Funny how it all works if you look at it, right? So you take all that aside, it's a very good indicator of it. So look at that chart. You're going to look through these charts. We're not going to spend all day on the market weekly that comes with all this. You can spend all the time you want. Fear has got a little bit of fear. We're off this silliness of no fear as far as the VIX goes. And look, we're going to watch this 50, see if it gets back under it, or if it consolidates and we get more fear going up. So remember, the cost of that is going to get higher purely by interest rates, right? That's got to be factored into the equation. And we mentioned that as far as optionality, the cost of protection, be it puts or calls, gets much more expensive. And there's a put skew and all that, as we know. Okay, so in the week ahead, we've got more housing numbers. We got consumer confidence. We got all the jobs report and everything that goes with that earlier in the week, ADP, etc. The other thing we've got is global PMI. It's going to be a big issue. That's a good measure of where we are manufacturing and services. I've put in, or I didn't, but we've added in from Scotia a good little breakdown of the big macro events for the US this week. And you can see there's quite a few: ISM, GDP, PCE, vehicle sales, etc. Right? Go look at the central bank. It's got its own. So there's a lot of stuff we do in addition to this: central banks, bonds, commodities, forex, shipping, all this. It's all free. So, and it's all put together by free time from experienced traders that is successful, and not distributors trying to earn a buck getting your sub stuff. Oh, did I say that? So we always have a special area for consumers. Why, you may ask? Well, 90% of the US GDP is made up of services. So we're going to look at how Best Buy goes reports this week, Salesforce. That's the tech, but it's also tied up in the consumer world. Victoria's Secret, Chewy's, Lululemon, just to name a few, Dell, etc. So you want to look how they're going, the understanding, and how much people are being hurt. We touched on real estate earlier, so perhaps people aren't spending any money on unnecessaries and spending more money, for example, on the higher mortgage, those that are actually borrowing. So all these things are real. Priorities have changed over time. Because of the nonsensical partisanship of politics, a lot of people, middle America or people in the middle, that have common sense, are now not looking towards what governments tell them to do or other people tell them to do. So they're changing what they see as value. So that's all these factors you got to put into stocks. That's why part of why the 5 big stocks are out there, the passive investing, how real estate is, etc. Right? So there's really different levels now in the makeup of an economy that isn't really being taught on, because too many of these economists, can't think of the blokes now, but the guy at Harvard, just a shocker. He's always wrong. But some of them, the left and the right, will play on and they make decisions on them, and we know how disastrous policy is around the world, right, by politicians. And if they're taking economists that have no idea that's going on. So last week we touched on it right at the top, the S&P v Nasdaq v Russell, and that is affected. You can see which sectors are doing good. Obviously the big mega caps, the communications, so it's going to have your big techs, etc. Energy, which was a big one last year, is basically tracking around zero. Let's see what happens there. Because again, it was overbought, right? Same as NVIDIA, and we talked about that right at the top. You can't ever fall in love with something, and you got to take your profit. It's very important to watch what you're doing, particularly in technology and drug stocks, because the markets change. Apple's a big one now, but think of all the names that were nothing a long time ago. I'm not saying Apple's going to go that way, or NVIDIA or whatever, but you just don't know, right? That's the bottom line. And I assure you the dribblers don't know. So all the markets were up in Europe. They were all up in Asia, other than China. We know what's going on in China. Australia was down. We know what a lot to do with that was because of the energy sector's been down for 2 weeks in a row. On that, iron ore, which is a massive part of that, has actually been rallying for, it's at 11-month high, I believe. It was 11 weeks for 11 months. I better go check that up. As far as emerging markets go, we saw a bounce in Mexico and Brazil, which is helpful for energy markets and for the US. Turkey and Russia, you can't play, I put them here, can't play much, totally manipulated, fake markets there. Okay, so we've got everything on here, all your charts, everything about here, about equities and everything. Bonds, you want to understand what's going on with the yield and the belly. So and we're going to look at these separately, but just going through quick to explain it. So talking in terms of yields, so yields up, bonds are low. Look what happened last week. The strongest bonds with the length out the back. So that's suggesting more safe haven. The 30-year actually fell. Now these are all higher at one point during the week, but the 2-year finished its high of the week on Friday, right? So notice the 2-year yield was up on the week. The 10 was flat and the 30 was down. Okay. So remember what that means. So go through all these mortgages. Look what's going on here. The 30-year is at 730 according to Freddie Mac. That goes all the way back to 2002. Right? The 15-year, same thing, up to 673. 5-year arms up to 711. A lot of people are in there. So, and here's another thing with corporate debt. The majority of debt doesn't come due out to 2030, a corporate debt, right? So it's all well and good what the price is here. It's who is paying that price, right? What we do know is the sheer cost of all this massive debt that's come on with this US government that keeps going up. So, and that's what's weakening bonds, that is new. So they're not going to be able to spend money other than on financing debt. Yes, that debt's never going to come due, more than likely, right? But still, that's a massive, massive price. So what's interesting is the same dribblers that go on about, they don't look at the relevance of where the debt is, who's paying the debt, etc. Who's paying it? The taxpayer. You and I, buddy. Right? So a lot of this is regular. We look at commodities. Well, of note is the VIX is down, but notice lumber is down this week after being the star last week, right? Also notice that things like wheat, which Putin, etc., are hoping that would go up, are actually going down with the Black Sea, etc. Oats was up strongly. Now, a lot of these commodities will be up and down each week because they're to do with weather, demand, and stuff like that, and what goes on in different world. So heating oil and gasoline was strong this week. A lot to do with that is the marathon fires on Friday, right? But gasoline's been pushing up for a while. Oil itself, as I mentioned earlier, was down. So Brent and WTI were both down. So again, what impacts inflation isn't necessarily the oil price, it's the byproduct, like the gasoline and stuff like that, right? So all relevant. Copper was actually up this week. That's been having a dismal time. The big thing that stands out to me, because the US dollar's strong and the Swiss franc's strong, and the 30-year we just saw was stronger. So that's safe haven buying. Also, silver's joined into that this week, and gold had its first up week for quite a while. I think it's like 3 or 4 weeks. But silver, big buy. Now, some of that is because of the mania that goes around BRICS. So the anti-US, end of the world, we're all going to, it's all just going hell in a handbasket. Crowd loves silver and gold. Silver's the cheap gold, poor man's gold, whatever they call it, right? So it'll be interesting how that fills out, because we had the BRICS conference. Now, in the big market, in the deep market, the US dollar was stronger. Now, the Swiss franc, yes, not up against the dollar, but it was up against the pound and the euro, right? So all these things are going on in the backwards. Yeah, all this stuff on the website. So commodities, oats, weather. Let's have a quick look at the copper chart. You can see where we had this breakup. Now, what's interesting is why I say beware of it. It's the same people telling you about oil at 130, natty at $10, stocks at bloody all-time highs. They'll tell you to buy copper up here. Price is relevant, right? So what happens now? It's got to be funded and everything. Yes, all this may change in 10 years, 20 years with transitions and population growth. On gold, look at this. So one thing with gold, you got this triple top. If it ever breaks and continues, it obviously goes a lot higher. It's got a lot to do where the dollar is. And remember the Russias of the world that have been buying gold, they're also selling it to pay for things, okay? So we're going to now jump on to charts. You can see the BDI Baltic is just weak. Look at this commodity. Now this is all distorted because of COVID, but very well it isn't rising. It's like a 13-year fall. Okay, the S&P has been a beautiful trader. This is what we identified down here, and we don't go. You can go back and look about when we all turned around and why these are bullish. Very contrarian, and this is why it's very careful, particularly people on FinTwit. Be careful who you listen to and experience and all that and what they're trying to flog you, right? Very clear. This is either a head and shoulders, head up here, left shoulder, right shoulder, really bearish, hell in a handbasket. Or this was your correction of all this. This is a 1-2, 1-2. What we do know is this, the perfect spit of the channel we long identified, right? So spits are very powerful, and just think about this is when the Morgan Stanleys and others, I can't remember, went from mega bears down here to it's all not going to collapse. Bang! There's a quick couple of hundred handles on the spoos, right? From a technical point of view, and remember, NovaWave uses maths and measuring crowd behavior, right? So we do know this is already overbought. We see the replication here. This was just testing this breakdown. That's one of the big things we look at. Then it had this spit here, or a throw over as Practor would call it. We came up with NVIDIA, retested tanking, and then bang, we're back here. So we need to get above that. We can see the bearish signals up here. Where the magnet, if you will, is the flats here and there. Okay, if we look towards the daily, we can see it more specifically. That's what went on, right? Over 4,600. You very, and we can see all this stuff. That was over plus 2/8 on the weekly, over plus 1/8 here. We can see where it got out of whack here, right? This is all technical stuff, but if you apply the logic of what went on with interest rates, currencies, remember they forewarned all this a long earlier, right? So watch those and understand, and just notice the manic behavior that went on with AI and other stocks. Just pick a stock, the crowd all gets in. So it doesn't mean you have to short it, because generally you're going to short too early. But once it all goes, you know what's going. But it may mean you don't have to buy it, remember? Some of the best trades you ever do are the ones you don't do. And everything, the most important bit of trading is your brain. Right? Mentally, how you're coping with everything. Okay? That's very, very important. So, all that said, this is what we're watching. So all this has just come back and retested the 61.8, the same level we saw the confluence. So you want confluence in time and price. So you get them on different sectors. And you don't want to be adjusting every day. You want to have a good plan months out, if you can, right? So that you can have structures to protect you and all that sort of thing. So here's the beauty. When VIX gets to zero, puts are cheap. Right? Conversely, when it's way up here, if you're trying to get long, vol's really expensive. So you can have a structure selling vol, etc. Okay, this cloud, this obvious reason. So you're going to look at your 240s and move on from there. NASDAQ, same deal. But look at the false break. Broke this sphere of influence, got up to your magical 16,000. Again, a different breakdown. Levels, but same levels, like time and price. And you can see how that all worked out here. What we're looking for is confluence. Because the biggest thing is repetition in market. Humans are predictable and unpredictable ways. So you're looking for that stuff. Look how far above the cloud is. So that, remember what we just saw on NASDAQ and on the Dow we didn't look at. But here's the Dow. Sorry I missed that earlier. But look at same sort of thing. Now, from a bull's point of view, 1, 2, 3, this can all go substantially higher. All of them, it's the same pattern if it's a bear. It's a rising wedge, it gives it away, last man's in, traditional bear market crap out, right? Okay, Russell. Remember, this is the dog of the run of the litter. The dog with fleas. So, perfect double bottoms here, but each one's less and less. We've had a triple top here. See this? Back in this sphere of influence. And look how when it breaks the 50, false breaks. Remember what I said about false breaks? They're more brutal because it clears everyone out. Right? But if you're an option trader, you understand that from vol, etc. So the Shiba move. So the bear is, this is ABC, completes a corrective wave. 1, 2, we go a lot lower. Now bear in mind, this can go lower and other markets can go up. We've seen that where the dominant, what do they call them, the Magic 5, Magnificent 7 or something like that, dominates everything. So that's why this isn't going up. And so we broke under that and we're right at this line, which is, so that's been your swing level and we're nowhere near that since it broke down. Okay, keep all that in mind. Okay, let's get this bloke out of the way so we can read this. So here's the Swiss franc. So this is against the dollar, but you can see it actually showed a bit of strength here. But the main strength there was in against, as I said, the pound and the euro, right? Okay, let's move on to some individual stocks. So Adobe's one I sometimes look at because it's kind of boring, but it is a tech. So that's a lot lower than Apple and NVIDIA and Microsoft and all those, Google. But it does have a more constructive pattern. It's actually got above here and it hasn't done it. So that gives you some hope if you're a bull. Okay? So let's look at, while we're looking at that, let's look at Exxon. It's held up here with all the selling in those energy stocks we saw. Look at this perfect little channel. There are your earnings. And as long as you can see it's staying above this cloud and everything, right? So pretty clear what's going on there. Okay, let's look at Tesla we looked at earlier. So let's look at the 240, which is a great time frame because it's between long term and it's short enough to be scalping with your other stuff. So we see on the yields, the 10 years I mentioned it got way up here, right? And then we came off hard on here. So a part of this is to do with NVIDIA, etc. And then the NASDAQ. Then we had, you can see all that happened with Jackson Hole. We went straight up, straight down, and we kind of closed around here, right? So, but look at these channels. These are predictable and what's going on, right? So try not to get all bearish here and all bullish here, basically. You know, keep it simple. Remember, this gives you a lead. And you want to be understanding bonds, not when the bloody dribblers and the sheep are starting to talk about them. All of a sudden, this is what drives me nuts with social media. Everyone's a bloody expert. I saw this great meme of a woman. She reminds me of a lot of friends, actually. She says, how come my husband is an expert on, all of a sudden, on everything? Like, she went through a whole list, like nuclear things, you know, obviously, with movies about it, natural gas, wars, now it's bonds, AI, etc., etc. You get the point. So it's very important to understand, though, take notice of those that are experts in certain fields. Natural gas should have taught you all that. Oil should have taught you that. Bonds. So go to where you know. What you don't know about, listen to those that know. Try and understand it. Don't follow them blindly. But don't be an expert of something that takes years to become an expert on. Right, so that's the yield. So a lot of people understand. A lot of people prefer the price more. So this tells, remember, that's the inverse in bonds. You can see it's sold off relentless, right? So you can see in price, and this is a bit scrunched up so you can look at it a little bit longer term, it needs impulse. But this is the first thing that I noticed. Shit, that's a reverse head and shoulders potentially, right? So we have some big numbers this week that are going to influence bonds. So you're going to come back and look at how all that goes out in a week or so, right? Okay, let's look at these magnificent stocks. Here's Apple. Beautiful patterns here, right? Look. And this, if you remember, this made us get really bullish on stocks, which you had positive divergence here, right? Right inside the sphere. Remember, they replicate, right? So now we broke up. Look where we went to, plus 4H. Remember then? Actually, we'll see on the video, plus 4H as well. But look at the sell-offs, and they're always to levels. Right, so you want to work out or try to understand 80% of this stuff is all algorithms. So you want to look at maths and crowd behavior that's what's running most of these moves. Outside of that, at things like stop losses and trend lines, right? So that's not the video I wanted to show you. Where's the one we looked at marked? Right, so plus 4H. Funny that, right? Look at the spits. So we had a breakthrough here. Remember, we went through all this months ago, why we were turning bullish on this, and it just happened to work out. So you want, a lot of this is luck, right? But you want to put yourself in a position to take advantage of luck. So this will be many times for this to happen, coincided with all the people that were losing all money were selling, the one that were holding their position was selling upside calls cheap, vol was low, then they had to force to cover, etc. We've been through that on many different times on other podcasts. And you can see the work at 8.8, plus 1.8, plus 2.8, plus 3.8. See the reversals? And look where they're reversing off. Invariably retests, right? So plus 4.8, right? We're coming down and to test the Tenkan. That's what's going on now. If it breaks down, you got all this, right? So you keep it simple. And these are weekly charts. So there's plenty of time for you to get in all this. Okay, let's look at energy real quick here. We'll spend more time directly on it. So natural gas, this look what the dribble is. All of a sudden they became what the friend was saying, a husband. This is when they're bloody experts. Look what happens. So we really have been going sideways since all year, right? And so what's interesting, there's people that came into natural gas that weren't in it before, and they're all over Twitter telling you what's going on. Pretty black and white what's going on, right? So that's your weekly, and you can see, looking back at that. Now, if you look at daily, here's one since last year's fall. So let's look at here from about February. It's been in this range. I think it got over 3 once, maybe twice. Got under 2 once. So it's basically a dollar move. Most of that 60 cents move, right? So the important thing of certain commodities is they're commodities, so they're used for hedging. They're used for real. The rubber meets the road. When they get out of whack, it's because of events. So it was a massive one-off event, invasion, Russia invading Ukraine, that affected gas and oil and grains. And so all of these have come back hard, and a lot of people have been caught at the top of all these. The people knowing what they're doing on oil, just look at how much traffic and Vitol made money, right? Here, let's go back to this weekly on Natty. Where was it? Where's my Natty weekly? There it is. So this gives you an idea why I have no time for governments trying to do things they don't know what they're talking about. They're good at accepting lobby money, and feeding their ego and spending our money and trading stocks, evidently, if we take the US. So let's take the Germans. So all of a sudden, Uniper and all these guys blew up because they couldn't afford it, right? So Germans get involved, give them money, they cover it all, so they're hedged up here. And there's a lot of people like this. Americans this is the difference between an energy company and a bank in California and New York. Most energy companies learnt their mistakes. Chesapeake, way back when they were hedging at 12.13, they got forced out 14.15, which is dollars, and it all went down to $1 or $2, right? But they learnt. So you still get your outlier, but generally they know they'll hedge properly. They'll have decent traders, is my point, because they're not political appointees and partisans, and that's what happened in New York and California banks, and it's criminal negligence in my view. It was well documented. Powell gave plenty of time. This is what we're doing. Bonds are going to fall even more. Cover them. That's what the bloke's saying, right? So same thing went on here. Uniper covers up here. Remember, same kind of percentage, but they're buying natural gas out here for Germans, etc., right? That's what really hurt them. Now, if they had much better management, they would have been better prepared for this. I mean, for goodness sake, Putin was saying he was attacking forever. He's putting all his stuff on the border. Anyone that's Baltic or Nordic or Eastern Europe knew a good chance of what was going to happen, right? And you had Biden poking the bear. You had Germany, though, were up to their heels in it because of Schroeder and everything, and that's why that happens. So that's why it's good to understand proper macro, proper stuff that was going on, right? And that's why these other guys made good money, knowing when to buy, knowing when to sell, and understanding that dynamic, and not getting caught up in partisan nonsense of supporting Putin or whatever in the US. I mean, just look at it with open eyes, right? And make your decisions accordingly. That's why I say never use politics in your decisions unless you're using them to gauge how it's going to affect price. For example, I very distinctly remember in a series of podcasts and meetings, but whether we said on podcasts, I don't know, but in meetings, I made very profound, it turned out to be, if Biden gets in, it's the best thing that can happen to oil and gas prices. Lo and behold, right? Boom. So all these prices happened before Russia in those markets. The point I'm making here with Uniper and Germans, this was well expected by people that didn't have their hands in the till, right? So, however you say that in German. So anyway, understand all that, and so I think most Americans now, other than your fringes that are partisan nut jobs, and I mean, just look at your choices. What Powell's got to choose. But look through it, and a majority of Americans, we see that in the House and self-management, are aware of this. Well, companies are managing like this accordingly. They're not going to be browbeaten by presidents telling them on oil and gas when to produce and when not to produce, when they know the risk and they have memories. So apply that logic also to stocks, right? NVIDIA's and all this. Make your own decisions on what a price is. Great product, great company. I think the bloke running it, Jensen's one of the smartest blokes in the room, but everything has a price, and we're NVIDIA bulls for a long time. But I'll give you a tip: you take it off the table when it gets crazy, right? So apply that logic to everything. Lambs get slaughtered, right? Good for sheep, good for lamb, good for wool, good for lamb. Okay, so that's your natty. Did we look at oil? I don't think we did we? So here's oil. Right now, we're just spinning around 80, and we have been for a while. Options, paper runs oil most of the time. Fundamentalists never want to do it. They will blame paper if they're a bull. They'll blame it if they're a bear. But look at why paper's doing it. Paper's hedging generally. Who's hedging mainly? Producers or big oil traders are the guys we've spoken about, right? So listen to blokes that know what they're doing, and ladies that know what they're doing. So here's a daily oil. Real obvious what goes on. There's usually around math levels. We get panic levels here after market. This was one. But look, it's very, very steady. Now, if I'm OPEC, I want this to be steady at high prices. If I'm US producers, I want it steady at high prices. If I want to fund a bloody transition, I want it at high prices. They mightn't say that, but I think they need to be making the money there to invest. And you're seeing that, more rationally now of some of the big oil companies. So before it was all politically based. And I think we're moved away from that, at least in the US. And for the most part, Australia. Unfortunately, Europe, not so much. We've seen what's going on in Holland and places like that. So try and take an objective view, right? And so not all politicians are bad. Majority are ignorant and scratching each other's back with this lobbying involved. Unfortunately, that's the US. But it is changing, and that's not what's running everything, right? And you can see that the hate and love they tried, even against Trump with Twitter. I'm not Trump, the other Musk and all this sort of stuff. Having not been born here, I sit back and it just amazes me what goes on with Trump and Biden and the followers and the stuff, right? And what's true or not, who bloody knows? But it's amazing. This is the biggest economy in the world. And the power of so many different things. So, you're not going to change it. So, okay, try to work what's going on. How does it affect your personal investment and being, right? That's the job you got. So when it comes to oil, you got to think of who are the main players, right? Who are the main producers? We know it's the Saudis, we know it's the Russians, we know it's the US. Specifically, Texas, Dakota, different area, but Texas is your big one, right? You got Canada above, which become a basket case. Maybe that sorts itself out. Then you got who's the buyers, right? So you got Mexico, massive buyers, particularly for Texas, gasoline, natural gas, etc. So all those factor into it, right? And when it gets out of whack, like here, it generally comes back in, right? And rebalances. On the weekly, for oil, even more so. Remember, this was the end of the world. Here's what's bizarre. I have some good friends of mine that are very left-wing and very involved in emissions, hate, fossil. Right down here, they were praying the fossil fuel industry went dead, and I was like, well, be careful what you're praying for. Up here, obviously being used to it, we've got friends from both sides, right? Up here, they wanted to go to 200. I'm like, dude, be careful what you wish for. So all those factors you got to put in, right? And be very wary of oil and gas analysts or tech analysts who are just pumping their own funds, pumping their own books, be it bull or bear. So just try and be logical about all this. Because commodities, you can be logical, they get out of whack. Even more so, let's take a look at wheat and stuff like that, right? So this is, well, that's actually, let's look at this one, Alcoa, which is aluminum or aluminium, depending whether you're American English or English. So look at the nut job. So this went from bankrupt up here, and because of all this stuff, commodity, end of the world, then Russia, look how it happened. We're back here. Up here, you don't want to take profit, and if you're not in it, you're buying more. So guess what? If you got a system, you're going to sell a little bit early, but after here, you're glad you did. You might be lucky and get some out here, but what you don't want to be doing is buying up here. Look where we are. I've seen all these dribblers been telling everyone to buy commodities since here. Right? So now things are changing. You've seen Cliff bidding for X, right? And stuff like that. So people in the know are having a sniff. So keep that in mind. But you just want to look. And so just remember this with equities, oil stocks, copper stocks like FCX. It's double the risk and double the reward, obviously, because you're powered by two different things there, right? So, and while we're talking, there's a lot of stuff coming out of China, by the way, with Xi all blaming all the West and everything right now as we go on. Who was the one I wanted to look at? Yeah, wheat. So look at wheat, right? So wheat's interesting. So Russia and Ukraine are 40% of the world's export for wheat. The other ones are like Canada, the US, Australia. All these countries over the years have drought. Droughts aren't a new thing. Floods aren't a new thing. Trust me. They've been politicised. Not to understate pollution affecting climate, etc. Right? What we're talking about here is wheat went from 480 up to nearly 1400. Look at this move here, 700 to here. Now wheat is important, but just look at how much wheat is in storage, right? Because why I mentioned drought and floods. Countries that are, and not little city blokes that never know anything but now know everything about farming and oil and gas, right? Probably don't even know how to drive a car and live in mummy's basement, are telling you what's going on. Well, this price should tell you what's going on. These two move. This move here is Putin's latest blockades. Look where it's happened. He cancels it, goes up and straight down. And this is with drought conditions. So price is all relevant to demand, right? And people change. Look at this beautiful head and shoulders. Now, I can show you multiple charts like this, so we're not going to. Go read the commodity markets and stuff like that. Okay, so we're pretty well covered everything, I think. So you got a lot out today, this week, sorry. And just go through all those and understand. Earnings-wise, not much. Couple of big techs, Broadcom, CRM. Mainly, it seems to be, most of it is retail, right? You still have some big commodities out of places like Australia, like I saw Fortescue, BHP's already reported. So you want to look at those, even if you're not trading, because it'll give you an idea of demand and supply and commodities and the relevance of those, right? So all this is on here. Join it. Like and share the videos. Follow us on Twitter. If it's not myself, someone else at Traders.com will answer you. When they can't remember, these blokes are trading and giving up their time. So there's Twitter. Right. So there you go. So I hope that was fruitful, enjoyable. Sorry we had to do it twice because we changed monitor. Yeah, but anyway, not exactly techs over here. Blame the tech department. Okay. Have a great week. Enjoy your family. Enjoy the heat if you're in Texas. Enjoy your